This podcast is all about why it's so expensive for you to buy a home and you can't find the one you love. We're going to talk about the commission settlement with NAR, and then we're going to talk about the perfect storm and how it's affecting home prices and the supply of homes.
Anton Stentner podcast number 55, March 27th, 2024. How's it going? It's been a couple weeks.
Well, you've got to take time off and go on vacation too.
There you go. We both did, funny enough.
Exactly.
But I'm ready. I had a lot of thoughts on my mind in relation to real estate. I guess the big thing I would say, and I would love to maybe ask you some questions, is I feel like we kind of understand where we're going, finally, to a certain degree. Of course, there's those variables we can't understand, but it's looking pretty clear how this year will probably end.
So when you say that, you're referring to Jerome Powell and his last speech.
Yes, and the data.
And the totality of the data. So, at Jerome Powell's last speech, right, he comes out and he says, we've still got 3 more rate cuts. The market cramped itself down and says, hey, we're going to believe them now. So the market's predicting 3 to 4 rate cuts. We may only get 1. What's really interesting when you look at what Jerome Powell is doing is that his job is to grow the economy and to keep full employment, keep inflation under control. Inflation's trending down.
Is it trending down? I thought it was ticking up a tiny bit.
It ticked up a little bit, but like overall, over a longer run, it's trending down. Mm-hmm. So he's winning the battle slowly but surely. With high interest rates, the economy's still growing, and unemployment's not super high. So he doesn't have to cut.
Yes.
He's not forced to cut. So what I believe he's doing right now is he's going for legacy. Let's go for legacy. I want to be known as the guy that stuck the soft landing, that made it through, that fixed the problem we created. And he wants to be better known than Paul Volcker, Bernanke, Greenspan. He's trying to slot himself there in history as one of our greats.
I say thread the needle. And this is what I think in terms of threading the needle. It still could go either way, but there's things we know for sure that he says, and there's certain realities that are happening this year. He says he's data dependent. So if unemployment is fairly low, the economy seems to be doing well, and inflation is trending down, but it's not like dropping off of a cliff down.
No, it's kind of bouncing. Yeah.
So he could absolutely hold rates and things should only get better, right? Like you said, probably drop 1 if he's data dependent. But if he ups 1, right? Or if he drops 2 or 3 times this year, like he has announced, that was kind of the plan or the desire based off the data, right? And we know we're in this good place. Well, we just know because of inventory being so low, house prices are very well going to go up. It's already going up in this situation. So if you drop the prices or drop the rates, that means more people are going to be in the market because they can afford the houses. House prices will go up. It's just inevitable if we do that. So that's what I mean. I don't know exactly what's going to happen, but from meeting to meeting, it's a lot more clear because the trends are going in a certain direction. And the last thing is, I'm not somebody that assumes they let politics influence what they're doing, but we know the presidential election is this year.
Yep.
So there could be some pressure, right? And so as that date gets closer, it's interesting because any dramatic moves could be looked at negatively.
Yeah, as them trying to influence it one way or another.
Potentially.
So the closer that gets, the less likely they are to make some type of a move.
Or if that does happen, right?
Yeah.
And there's not the data to justify it, then we know he's playing politics or being pressured, and then
it would really make us look bad.
And not only do we know what could happen in terms of house prices, we also kind of can foresee what would happen in the future.
So a way to think about this is whenever they signal and finally cut rates, that's a signal to the market, the stock market, the real estate market, that rates are going lower. What's going to happen then is you're going to have asset inflation across multiple asset classes because you know cheap money is coming. So whenever they start, unfortunately, that train starts moving. If you go back through history, though, the Fed has only kept rates high for 15 months on average. So we're nearing the end of that cycle right now, of their just kind of natural cycle when they jack rates high. So that's kind of a natural cycle that's coming. Also, I made a comment on Michael Zuber, One Rental at a Time's video. He posted a great video, but he said, I think Jerome Powell should have been more hawkish. What are your thoughts? And I just replied in a quick comment was, I think he was playing for legacy at that moment. And I think he knows the data is a little worse than it is. And because most of the data as it comes out is so old, he also gets forward-looking data. It's the government. They're going to get better data that they don't always publish. That he knows, some problems are coming. So 1, let's signal everything's okay. 2, let's signal we're still going to cut, because then he gets the ability to not allow the market to just shoot one way or the other, but also to just kind of say it's okay and let the hand play out across longer. And as that hand plays out, it actually becomes easier for them to do things. See, the longer this hand plays out, they're more powerful. Their their interest rate tool becomes when they do cut. If they cut too early, it has less oomph and power behind it.
The one data that we know for sure that we have observed personally, that's going to influence everything more than inflation, I believe, more than interest rates, inventory.
Oh, supply.
I never realized that's all I words. Inflation, interest rates, inventory. But the reason I'm bringing this up is we've been tracking it for now almost 2 years. I mean,
Yes.
me and you probably like 3 to 5 years because of some projects that we're working on.
Yeah.
It is still low.
Yep.
There isn't a lot of new construction coming into the market, so it's going to stay low.
Yes.
So that is almost like a foundation that won't move.
Yes.
So any adjustments that he makes or any data that comes in is kind of all based off of that. And that's what's fascinating about what I mean. It's the first time we kind of have clarity about what's going to happen this year, because we know houses just can't come back with a vengeance in terms of housing supply.
I love how you just said that. And I love how you actually haven't read the questions, because point 2 for the people who are going to listen all the way through is we're going to go exactly through the loss of supply and what it's going to take to fix it.
Should we start there since we just talked about it?
Yeah, let's go.
Okay, cool. So I actually haven't seen this graph, but the headline is how many homes in the U.S. are behind? How bad is this housing supply? Tell me what the numbers are saying.
So this is the housing shortage put together by 11 major research firms. And then this data was aggregated together by Resi Club. They've got a phenomenal thing that you can subscribe to. We subscribe to it. So the estimates on the high side, so Morgan Stanley had 2 estimates. They had the high side of 6 million units behind to a low side of 2 million units. Now I'm going to go through the rest of the predictions. Fannie Mae, 4.4 million units behind. Zillow says we're 4.3 million. Bank of America, 4 million. Freddie Mac says we're 3.8. National Association of Realtors. So the realtors have a self-interest. So the people with the self-interest said 3 million. The realtors also have a high prediction of 4 million units, so I want to throw that one out there too. Realtor.com, 2.5. John Burns Research and Consulting, 2.1. Morgan Stanley, 2. But remember, Morgan Stanley's 2 to 6. JP Morgan, 2 million. Moody's, 1.7. And Zonda, 1 million. So if you take all these and you average together, okay, because some of them are right, some of them are wrong. Just look at the average. The average says we're 2.8 million housing units behind here in the United States. That is insane. So I want you to think about this for a second. That means if we're selling about 4.2 million homes a year and we're 2.8 million behind, it means that you have 30 to 40%, maybe even 50% less inventory available to the United States that should normally be there right now. And then John Burns took these numbers again and actually just came out with this. data, John Burns Consulting said we need 1.86 million homes built every year until 2033 for us to catch up and get back to a neutral supply and demand.
20 what?
33.
1.6 million till
1.86 million until 2033. So just round up, call it 1.9.
Yeah.
Say it's a decade.
Yeah.
Well, then you go, okay, well, how many homes are we actually building, right? So you can look this up in the U.S. Census Bureau. Unfortunately, U.S. home builders are only building 1.4 million homes every year. So we're already 2.8 million behind. And we're losing or behind an additional 500,000 homes a year. So when the crash bros come out and go, oh, the sky is falling, prices are going to go down, they can't do math because you're too many units behind. There's too much demand for the supply to get there. The second part of this too is the politicians, is the general public, the media. They don't want to fix supply. It's not sexy. You go, oh, we need more supply. It doesn't sound cool. It's not going to get me votes. We need to fix how houses are built, how new construction happens, the cost of land, the permitting fees, the entitlement fees, the NIMBYs who say not in my backyard. None of that's sexy. That doesn't get you votes. What gets you votes is when President Biden came out and said, I'll give you free money. Free money is the attack on the demand side. That would just drive prices up even more. The only way to fix this is to build more homes, and we're not doing it. So, had an investor in the office earlier today, and he said, what do you think the long-term prospect is for Snohomish County? That's the county right north of Seattle. And this gentleman is right near retirement, and he's been an investor for a long period of time. And I said, you really want to know long-term? And he goes, yeah. I was like, do you know what Elon built there in Texas? He goes, Starship? I was like, what is it? A rocket. I was like, that's where everything's going. It's going up like a rocket. Look at how much appreciation we're having right now with interest rates at 7%. As rates come down, that appreciation will just go up because they are not building enough homes here in the U.S. and solving the supply problem isn't sexy.
Let me tell you what is going to be sexy, and it's going to come out of left field, but let me explain.
Yes, please. Let's go.
Being able to build a house is going to become sexy. This is one of the problems that I've learned from construction workers and people in the construction industry. They lost a lot of that skilled labor during that last crash. People either just got out of the industry altogether, right? Got different jobs, different professions, went into other industries, or people retired a little bit early. So you had a double whammy.
Yeah.
And then even in the government permitting, we're experiencing this, they never caught up, right, with what happened because like everything halted. So there wasn't any need there. Same thing happened in that industry as well. People that were there forever maybe just like moved to other departments or retired early. So that whole industry got hurt and never came back. Part of the reason we're not building isn't just the permits are taking forever. We don't have enough people that are skilled at this stuff. This is why plumbers are making six figures. Yes. Now, this is partly because that industry was never sexy, but now it's going to be like, I can make six figures as a plumber. Just imagine what like roofers or skilled carpenters are going to be making. And we're just talking entry-level spec homes. If you're into custom, I mean, you're just making a ton and you're always busy. That's one thing that's crazy. I asked all the people in the real estate construction industry how busy you are. The only time in the last, I want to say 5 to 6 years, people said they weren't busy is during tax season because people are hesitant to start a new project or do whatever. And the reason I bring this up is the only way to fix this whole problem that you just mentioned is to build more. Permitting is going to be slow. Hopefully that gets speed up, but that could be next to impossible. And then to get more people in the business.
In 20 years of land development and new construction, I've been doing it for 20 years. The permitting process, the timeline, the cost, the amount of red tape has done nothing but do the same rocket up, 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 up.
Would you say in the same 20 years, this is the least amount of skilled labor we've also had?
1,000%.
So if you
I would say we have half.
So if you combine those two alone,
Yes.
right, that's already a hard task because you're not gonna train somebody to be able to get to that level in the next 12 months. And then the permitting, that could be a long time. So even this was kind of interesting. Even if you just had a lot of money to throw at this problem, which is already not a sexy thing for the government to do or anyone to want to get involved in, like this decade might just be for starters.
We will most likely never catch up on supply in the United States as long as we have babies and immigration.
And then this is the
Period.
final statement I'll say. The crash won't be in housing prices. It'll be like a housing availability crash.
Ooh, let's make it even deeper than that. Attainability. We're going through the attainability crash where you are being forced to be a renter instead of the ability to become a buyer. Sounds like we should talk about the commission settlement.
There you go. Okay, so I saw this when I was gone. NAR commission settlement, obviously NAR being National Association of Realtors. So this has to do with real estate agents and the commission they get paid. Can you bring us back? Tell us how this even started,
Yep.
What were the details, and then how they landed on this.
The short version of it was a giant class action lawsuit was initiated, and there's been multiple of them, where sellers sued and said, I shouldn't have to pay a buyer commission. And they said the National Association of Realtors colluded together to keep commissions high and locked in at a certain rate. And so NAR essentially admitted no fault. And what they did was they came up with a settlement. Who's the biggest winner here? I'm going to tell you it's not consumers. Unfortunately, it's the attorneys. So the attorneys are immediately the biggest winner. They're going to take 30 to 40% of the $400 million plus judgment in attorney's fees, number one. Number two, what this is actually doing is it's going to complicate the industry. And I don't know if it's going to actually bring about the change that they wanted. So what it's saying is that commissions can't be offered now. And this is for NAR member MLSs. So we are in Seattle, and we're part of the NWMLS, which is member owned. So it doesn't even apply to us.
Really?
Okay. Now we'll get there in a second, but this is only for NAR-owned MLSs because they colluded.
They were the ones that had the bad,
Traditionally speaking, there's somewhere between a 2 to a 3% commission paid to a listing broker or a listing agent, and then there's a 2 to a 3% commission paid to a buyer's agent. Generally speaking, those fees have been paid by the seller. Okay, but then the seller also generally has a title and escrow and a transfer tax. So it's expensive to sell a home. However, all of those fees have and always are negotiable. There are discount brokers for sellers where a seller could pay the discount broker $500, $250 and put on the MLS. There's ones where they could pay 1%. And conversely, they could choose to offer a buyer 0%, 3%, 10%, whatever they wanted in there. The argument was because it's known that a buyer's agent would steer a buyer towards a particular property. Obviously, these people have never bought and sold real estate. I've never steered a buyer, not because of commission, but buyers buy based on emotion. I can't control their emotions. What they do is they walk in and then they look at each other and they go, honey, this is the right one. It has the kitchen. It has the backyard. It has the schools. Look at the master bath. And then the husband walks into the garage and goes, I can do my thing here. And I can barbecue right there because the husband only gets like 1 or 2 places for his stuff in the house.
One.
Yeah, one on a good day.
And then that gets taken over too.
Especially if you have multiple girls.
There you go.
But what happens is that's an emotional buy. The agent doesn't get to insert themselves and change that emotion. Their emotion causes them to buy, not what the agent was getting paid or not getting paid.
But this commission settlement is stating that it was being driven by the
That's one of their arguments.
Yes.
Okay. So what it's doing is it's taking commissions and it's decoupling them. It's breaking them apart. So you're going to have some type of a commission structure. Oh, I want to lay this out. Fundamentally, I don't think this changes much quickly. It might change stuff over the long run. In the short term, I don't see it changing because this also has to be agreed to. This is just what they proposed. So this hasn't even gone into, and then the judges, as they sit down, they got to look at it and go, what I decide here now becomes case law, and that case law sets up future precedent. So they'll take extra time as they weigh in on this. The other part, too, that people have to be thinking about is 13% of our economy is based around housing in some form or another. And so if it's going to affect a large part of the economy, expect major heavyweights to weigh in to protect their self-interest, not just the National Association of Realtors, which includes home builders, which includes HVAC people, blah, blah, blah. They all need homes turning over in order to make this happen. But they basically says a buyer's agent commission cannot be offered in the MLS. That it can be offered outside the MLS, but then it would have to be disclosed. So you go, wait a second. I could just do a Facebook post and say we're offering to pay a 3% commission. Or they could just call and say, hey, are you offering to, does the seller want to pay a commission? Yeah, the seller would like to pay a 1.25 commission or a 6%, whatever the number is.
Won't that make it worse?
It's just going to make it worse. It's going to make more phone calls, more text messages, more communication necessary.
But also, won't that incentivize agents to go towards those higher commission offerings?
Bum, 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 bum. So there's always the law of unintended consequences. There's going to be other things too, where the seller's going to be able to just offer concessions. So the seller could say, I'm offering 5.2% in total concessions. Maybe the buyer's agent gets paid 2.2%, and maybe the buyer took 3% in closing cost concessions. So they're going to be able to offer total concessions, which could be pushed around. Here's the good parts, which so I like this because we've already talked about stuff like this before. I believe and love the professionalism of real estate. So anything that promotes professionalism, I'm for. This is actually going to force buyer agreements. What it's going to prevent, though, is it's going to prevent the looky-loos. So what's going to happen as this comes into effect is the buyer's going to pick up the phone, they're going to go ring, ring, and they're going to go, hey, Benji, I want to see this home. And Benji, if he was a licensed real estate agent, he would go, okay, you have to sign a buyer's agreement, otherwise I'm not showing you the home. Because they have to have some type of representation. It's also could cause where random people just knock on your door in the middle of the night because they don't want representation and go, hey, let me in. But that's not what the seller wanted. One of my friends said something to someone that I thought was just brilliant. I said, okay, let's just say we offer 0% to the buyer agent. Should we charge people admission to come to an open house? And the seller goes, well, no. Well, okay, so we shouldn't charge admission like an auction, and we want to create an auction effect. We want as many people to come through as possible. And then he said, should we pay the buyers to come to the open house? Well, that's a good idea. We should totally pay the buyers. I mean, if we incentivize them, more buyers would come. Well, what if we only had to pay one buyer, the buyer that actually bought the property? And the seller goes, that sounds amazing. Well, see, that's what we've always done. Mm-hmm. We're just going to decouple it. Now, this is going to create choice for consumers. So again, I like that. There may be people where they may decide to hire an agent hourly. And there's going to be agents who are $100 an hour. And then there's going to be agents like me that are $2,500 an hour. And they'll be like, open a door. And I'll be like, that's $2,500. And they'll be like, no. And I'll be like, I don't care. The other thing too is this may hurt the buy side of the commission. For people like me, my business has always been dominated by the listing side. I still have a store. I still have goods. It's going to also promote alternative models. So this is going to promote more pocket listings.
What's that?
That's where someone knows a seller wants to sell and they're not telling anyone else. They're kind of keeping it hidden in their pocket and they don't put it on the MLS. They just shop it to some of their friends. It's going to promote wholesaling, where people put things under contract and just sell the contract to someone else. It's going to promote weird tech-enabled things we haven't even thought of yet. Let me give you the example. When Uber came around, their taxis, cell phones, GPS, and apps all existed before Uber showed up. Uber showed up and said, you know what? We're going to provide a higher level of service where we can connect a car and a consumer via an app and a cell phone. We're going to make it safe, quick, and easy to get them from A to B. Now, if I Uber everywhere, is it more or less expensive than if I just went and purchased a car?
It's probably less expensive.
Significantly more.
Oh, significantly more? Why is that?
So let me give you an example. I just took an Uber in Phoenix. The Uber I took in Phoenix cost me $23 to go 15 minutes down the road.
Got it.
If I had a car payment, would that cost me $23 for the gas, the insurance, the maintenance, and all that?
I was relating it to one house that you're visiting.
Got it.
Right.
Okay. So we're talking about you're now going to use Uber all the time instead of buying a car.
So what you're saying, I don't know if it's ruining your
you're cool.
thing. You're basically saying now you're going to be more discerning about where you go.
Bingo.
Than going everywhere.
The buyer's agent is going to be 9,000% more discerning about which buyer they work with. The buyer is going to have to be more qualified in order to be worked with. And then also some of these buyers are going to pay a lot more to be worked with. Because of that decoupling, there may be a menu of services which may cost, instead of 1%, it may add up to 5.5% versus traditionally it was only costing 2.5% to 3% before. What's funny is they say the seller pays this, but isn't it the buyer who gets the loan to pay for the freaking house? So the buyer paid for it by paying the higher price for their own home anyway. It just happens to be on the seller side of the debits and credits. Kind of a weird thought. So professionalism is going to get higher. Voyeurism is going to go down. Buyers are going to have to get more professional. But then our unintended consequence is, who does this hurt the most? This hurts minorities, first-time home buyers, and people who barely qualify. That pisses me off. My family came to this country because it was the land of the free, the home of the brave, and the streets were paved with gold. I'm first gen on mom's side, second gen on dad's side. So that kind of immigrant work ethic is literally bred into me. What we're doing is we're saying, once again, it was good for us, but it's not good for the next generation. Thank you, baby boomers, or whatever generation above me, I'm going to blame you. Because we're taking away that American dream and we're forcing more of them into being renters because we're going to make it harder for them to purchase.
It's already hard right now.
And it's already hard right now.
There's two parts of this question. The first part is more of a statement, but the way commissions basically came to be, 3% on one side, 3% on the other side, was just the natural way of things. It was capitalism just working and finding this number, right? And then we even know that at a certain listing.
And even when you say 3%,
Yeah.
because I own 2 brokerages.
Yeah.
So I get to track the commissions of almost 400 agents.
Yeah.
It's not 3%.
Yeah, it's gone down. Actually, that leads me to my second question.
It's been less than 3%. So commissions over time have been trending down naturally.
This is my point. The second part of my question is because house prices have gone up.
Bingo.
Okay? Because the cost of living isn't like it's not keeping up with those house prices. So like as an agent, you don't need it. This is the things like, why would you sell 10 regular size homes when you can do one mega $1 million listing? That was always the question. Now there's obviously things you need to do for those more luxurious listings. That's a whole nother discussion. But at one point, a buyer's like, I know this because I've talked to other buyers. I've talked to other people in the industry that aren't professional. Like, well, why am I paying that much? Right. And then hence negotiation. So what I'm trying to say is this thing that they're doing, this commission settlement, not only is going to hurt the industry, it was already happening, like self-regulation.
It was not even self-regulation. It was capitalism. Capitalism was already happening because the market was operating as an open and free market. Because even though they're saying NAR colluded or Remax or whoever it was, right? You have to realize real estate brokers are independent contractors.
Yeah.
So they can negotiate for whatever commission they want. And when you look at the commissions, because once again, I get to see a lot of them, you see they're all over the board. You see them from flat fees to really high. And then on some, when I say really high and I dig into it, I understand why. There was actually a justification for that person providing a certain level of service or a certain activity above and beyond what the norm was doing. Because I saw one, it was on the listing side. It was 6.5 on the listing side. And so I pick up the phone, I call the agent, and I go, wait, what's going on here? Like, this seems like a lot of money. And then they break down what they were doing. And I was like, oh, you're actually making less money than other people. And you did all of these other things, which included the remodeling of the house for this seller. Cool. Makes total sense.
And so I guess where I land with all of this is in the effort to protect this minority of people, not minorities, but just like the small amount of people that got taken advantage of, they're hurting the industry short term. Because of what's going to happen to,
I don't know,
what's going to happen because of the regulation.
I don't think this is the funny thing. I don't think it's going to hurt the industry.
Yeah.
I think the industry will shrink a little bit. And I think we'll lose 300,000 agents, maybe 500,000. I'm fine with that. Level of professionalism goes up. Once again, I like people who want to play Olympic level real estate. 2, I do believe it hurts the first time home buyer because it'll make it harder. 3, I could actually see Fannie Mae, Freddie Mac, FHA, VA, HUD coming out with things where buyers can finance in the paying of an agent. Because the thing that can very much happen on that FHA buyer, that VA buyer, because those are your low down ones, is they're going to get hammered here. And so the number of FHA approvals is going to go down. So then the government's going to step in and go, wait a second, we're destroying first-time home buyers.
Then why did this become such a huge headline?
Because it's clickbait. It's clickbait on steroids.
Oh, really?
This is clickbait cannon fodder on steroids. I'm not worried. Now, let me flip it over again. This will create opportunity, though. This decoupling of commission and the increase in professionalism allows people to charge more and to be able to differentiate themselves. So for people like me that have done thousands of transactions, I go, game on. Also, this is going to create kind of fun opportunities in tech where you're going to be able to go like, oh, I want these a la carte services, because I may have someone that's super experienced like you that just shows up and says, hey, make the offer, negotiate, and open 4 doors for me. And they choose something else. I could totally see that happening. I'm cool with that. What I'm also not cool with is the second unintended consequence. Who does this help the most? If it hurts a first-time home buyer.
Then helps like people with money or investors or already probably don't need the agent's help as much.
Keep going up the food chain. So you said investors, people with money. It helps corporations and hedge funds again. Because a corporation or a hedge fund that owns tens of thousands of homes
can now like really lower that commission rate, making them more money.
Do you
think they could be pushing it secretly?
I wouldn't put it past anyone. Like,
because that doesn't sound like conspiracy theory. They're like, hey, if we move this along, that 1% to them could be hundreds of millions of dollars.
Well,
that's why I'm asking. I'm curious. Like, who would push
one thing
this?
We're going to talk about later,
or right now?
No, I'm going to bring it up right now. Is Invitation Homes owns approximately $35 billion worth of real estate.
So is this the third topic, which is the tricky local regulation and a decade of cheap money in the housing market has created a perfect storm? Do you want to tell us what the perfect storm is and break this down?
For those of you that are listening to the whole podcast, we'll come back and close on that in a second. But I want you to pay attention to this part. The perfect storm was we had super cheap money for a long period of time. And that super cheap money caused Wall Street, Main Street, and Bob and Betty Smith to all go buy a bunch of real estate. And so I kind of wrote this out to give myself a guide. Low rates equals lower borrowing costs. Lower borrowing costs over a long period of time equals a housing boom. Low rates plus a housing boom plus a vast majority of the market now having interest rates below 4, when interest rates rise way above 4, creates a lock-in effect that pinches the supply. So home prices went up and then rents went up right after it. So what they were talking about here was, this is the CEO of Invitation Homes. And for those of you that don't know, let's explain who the boogeyman is. So when the media talks about the boogeyman and they talk about corporate buyers, this is number 2. So BlackRock, the largest institutional investor in the world, started Invitation Homes. They later on sold off their interest in Invitation Homes. Yeah, right. They're totally out. They don't have any part of them anymore. Invitation Homes is currently the second largest owner of single-family homes in the United States, and they own 84,000 homes according to their 10K filing. I actually went and looked at their 10K, and it shows what the price per share and all that is worth on there. So I did some quick math. The median price, according to the U.S. Federal Reserve in the United States last month, was $417,000. So if we take $417,000 times 84,000 homes, you get the fact that Invitation Homes owns $35 billion worth of real estate. Last year, their revenue went up 8.6%, or roughly $2.43 billion in revenue they did last year. So what he was talking about was, man, we had this decade of cheap money, okay? Because the cheap money actually started in the Great Recession and then got really, really cheap during the pandemic. We've had regulation go up at the local and state level, which is pinching supply. And then we had that underbuilding of supply. So what he's saying this is the perfect storm, and why housing is just going to continue to go up in price. He didn't say this is why our business model works so well, but it's why the build for rent model across the United States and the single family rental model has been working so well because we're so undersupplied. Now, if you go back to the other topic we just talked about, where they come and they decouple commissions, to wrap this back around, and they decouple commissions. Does this help the first-time home buyer, or does it help Invitation Homes with their 84,000 homes?
Yeah, it helps them with their huge portfolio.
Okay, so let's do some math, and let's just say
1% savings.
Let's just say they $35 billion. And it's funny, you actually have to look at the calculator multiple times to make sure you're getting there. 35 billion times 1%, 350 million saved. That's an unbelievable number.
That's just one company.
That's one of the corporate buyers.
And the first-time home buyer or that lower level consumer, right, that can't afford it, have to potentially pay for that.
They would have to potentially pay their agent or pay something,
Yeah.
or, heaven forbid, possibly get taken advantage of. Are there sellers that are sharks out there that would take advantage of an unrepresented buyer? Yes or yes?
Yes.
Would they sell them something without fully disclosing to them? Would they sell them something that looks like it's in perfect condition, but that buyer doesn't know from lack of experience to go do their due diligence?
And would that buyer buy into that situation thinking, hey, I'm not going to pay a buyer's agent because I want to save money, and not even know that was all happening to them.
Bingo. And then they just bought a lemon. So that's what worries me here overall. Everyone still thinks corporations are the big bad boogeyman. The Urban Institute, I went and found this for another YouTube comment because he said corporations are the reason prices have gone up. They're part of it, but they're not the biggest part. So corporate owners, according to the Urban Institute, that own more than 100 homes, they own 574,000 homes here in the United States, which represents 3.8% of the rentals, 4% of the single-family home rentals. That's it.
But it is growing.
But it is growing, and it's not insignificant. And in certain markets, they've changed the market.
And ultimately, what I think you were trying to say that I'm like thinking right now, the bad guy is government policies that lead to regulations that end up being bad for the market, and then monetary policy, which creates low interest rate, or it did. And guess who takes advantage of that at the highest level? The corporations, investors, or whatever. So they're just playing by the rules.
Yes.
But the rules were created by both the Federal Reserve and the government. And they think, again, this is why government, in my opinion, should be smaller, because they don't know any better.
Yeah.
And when they get bigger, they make these decisions, both on the policy side for regulations and then the monetary side for interest rates. And guess what? These savvy investors and investment hedge funds or whatever just leverage that.
That's all they did.
At the highest level.
So when interest rates were really low, everyone went and bought a house.
Including them.
But corporations went and bought thousands of houses.
And didn't you say they even get a lower interest rate because they're a source of funds?
Yeah. So we haven't gone into that. Thank you for bringing that up. When you're borrowing for 100 properties, do you think you pay the same rate as Bob and Betty Smith buying one home? No.
They get the bulk discount.
They get the bulk discount. It's simple. They're going to pay way less. So that increases their competitive advantage. This is why so many consumers are rightfully kind of pissed off about this, but they're blaming the wrong boogeyman. That's like a minor boogeyman. The gigantic boogeyman is the supply boogeyman, but the supply boogeyman isn't sexy. It's more sexy to say, and it gets more views on TikTok, and it gets more clicks on the internet. It's a corporation's fault. Simple. That's what they go. They go, oh, it's a corporation's fault because it's not sexy to say we just didn't build enough homes. But that's the simple answer.
What's the summary of today's podcast?
The summary of today's podcast is that we are in a housing crisis. And this housing crisis was created by lack of construction during the Great Recession and then increase in regulation costs, timeline, and fees. We're looking for boogeymen to blame. And we're trying to blame the real estate brokers. We're trying to blame the corporate buyers. We're trying to blame the politicians. When the reality is we haven't built enough homes, there's not enough supply. And conversely, I want to flip this over. If I'm a buyer thinking about should I buy, I go, I probably should, because this supply argument says that we're currently becoming 500,000 units behind every year. Therefore, prices go up. If I'm an investor then thinking for the long term, the best time to plant a tree was 20 years ago. So the best time to buy a piece of real estate is now. Get going, find a good deal, make it happen. I think your sexiest play, because that's what, we said supply isn't sexy. So the sexiest play is go make supply. Go flip a home. Go build an ADU onto the property. Go build a duplex. Go do a short plat. Being in construction, mark my words, being in construction over the next 20 years is going to be cool.
Like I said, it's going to be sexy.
It's going to be sexy. You're going to get paid well. But to pay those workers well, housing will become more expensive. So what we're doing is, I don't even like the word affordability. We're creating housing attainability problems. We're forcing people to be more renters for longer, and we're making it unattainable for them to purchase their first home. I don't like that part. We have to make it easier for the first-time home buyer to purchase their first home. That's the American dream. That's the strong middle class. It's why my family came here. It's why we're all here. We have to keep that dream alive.
There you go. All right. Subscribe for more podcasts here. Also, how can they get a hold of you if they want to buy a house right now?
You can just Google Anton Stettner or rsg.com. You will find all of our contact information right there.